All right, ladies and gentlemen, it is earnings season coming up. We got Tesla, we got Netflix. This is going to be an important one. You're going to see some big drops and some big pops. And I want to go over with you guys my earnings strategy, because there is a clear strategy that is better than most, that essentially you can take profits into a very large amount. You don't really have to risk your own money in a substantial way. And that's what we really need to cover here in this video. That's what made it able for me to play Facebook earnings, $50 into $5,000 per contract for really no risk, right? Snapchat calls to the upside, Ford puts to the downside. All of those were multi-1,000% winning trades that we hit last earnings season that I think there's going to be a lot of opportunity for this earnings season as well. It's going to be very crazy, and I want to give you guys the inside scoop on how my strategy really works. It's very straightforward. It is very, very simple, but it is an important one. That's only for the degenerate gamblers, likely you are, like myself, to kind of protect yourself and be able to play these potential big winning trades. On top of that, I want to go over why I think AMC stock is about to rebound in a very substantial way. I think Friday was very clear and sent us a big message. So we're going to get into all of this. Let's not waste time. Hit the like button, subscribe to the channel if you guys like these kind of videos, and most importantly, go ahead and follow me on Twitter, link down below in the pinned comment. And if you guys want to get access to everything that I am trading in real time, link down below in the pinned comment. All right, so the core reason I think AMC stock is about to rebound in a very substantial way is very simple. The core of this, we'll get into the details in 1 second, but AMC stock ripped up 200%. It fell, lost almost all of those gains, and it's really started to consolidate. This is consolidation right here. We are back and forth, but we are staying in a very tight range. We're no longer just free falling, and obviously we're no longer just ripping straight to the upside. So it looks like you're seeing a lot of consolidation, a lot of demand under these prices. And look at these wicks. These are triple bottom wicks. This wick is almost down as low as these ones, but typically when I'm trading and scalping, when you see wicks that have extended, just call it downside, right, where it comes down and it rebounds back up, that's where I usually like to initiate a scalping trade on the daily options. And then especially when you don't get that next wick down, when you see a really tight range, especially on a day that was really bad in the broad market. So simple as this: a triple bottom on the bottom wicks, and then you see a candle that does not have that bottom wick that tended to actually hold up and try to go up throughout the day. You actually had a top wick breaking above the 50-day moving average. That is a technical signal to me that you're seeing a lot of demand, you're seeing a lot of consolidation, and that you're likely to break above the next big moving average, which happens to be at $18.46 per share for the 50-day moving average. And that's very important for trading algorithms. And if we can break above that, that'll likely give us the boost up to about $21 per share. Now, maybe this is some anticipation of the next big catalyst that is coming for AMC stock. We know Adam Aron is looking to invest in 5 different businesses worth up to $100 million a piece. And I think that's going to be seen as a very good thing for AMC as a stock, as a business, to diversify. It's going to be a reason to buy the stock again. And as you guys do know, stocks are running very hard in this market environment, but they are only running hard if there is a catalyst, if there is a reason to buy them. So long story short, I think that's why AMC stock is going to have a rebound this upcoming week. And I think we're going to come up, retest 21, and I think it'll play out kind of like we've seen right here. A little bit of resistance, and then you're going to finally get that break above, and then you will break above that 100-day moving average sitting at $22.01 per share, and that's when you could really see those new highs, or those new recent highs above $35. Now, it's going to come down to market sentiment as well. I think the stock market has pulled back somewhat. So if earnings are just decent, then you might see another move back to the upside. But ultimately for the MOAS, as you guys know, you want to see the markets coming down. So either way it goes, I think AMC is going to look pretty damn bullish this upcoming week. So that's basically the philosophy there. It all comes down to the technicals, down to the moving averages, down to the wicks that we've seen, basically the triple bottom wicks, and then the fact that the next wick did not come down even close to those. It actually held up, and you've seen a top wick that actually broke above the moving averages. That is sending a clear signal. If this was a 1 minute candlestick chart, and these were 1 minute candles on something like the SPY, I would initiate a long position. As soon as it does break the 50-day and actually hold above on the 1 minute, I would initiate a scalp, right? So it's looking pretty damn good in that regard. It would have looked better if we had broke above the 50-day moving average, but considering the markets were down substantially, it doesn't surprise me. As you guys can see, just look at my portfolio. Snapchat down 4.44%, AMD down 5%, AMC down 3.29%, DraftKings surprisingly did not do all too bad, down 1.79%, Square down 4.20%, Fubo down 4.10%, SoFi down 5%, Lucid down almost 5%, Affirm down 8%, PayPal down 2.72%, Mullen down 10%. You guys get the idea here. AMC was one of the best performing stocks in my personal portfolio, or at least one of my portfolios. This one right here. And, I think it's really telling that AMC did not just crater on Friday like it probably should have relative to some of these other stocks that are safer trades that actually did crater themselves. So that's pretty important. Wanted to go over that with you guys briefly. Now let's talk about this option strategy. So essentially, when you're heading into earnings, we will just use Apple for an example because I'm pretty bearish on Apple. Apple does tend to have ways to not manipulate their earnings, but they kind of like to offset bad news. So if demand is slow and their earnings numbers are not good, they're going to come out and talk about their EV car endeavors. They're going to come out and talk about something else. So it makes it very difficult to sometimes trade stocks based off of earnings, because even if their numbers are bad, there could be something that offsets that and the stock could actually go up. I know you guys have seen that multiple times, many times before. So even if you have a good philosophy why you think a stock is not going to do well, it could still go the opposite direction. So you don't want to just YOLO all your money on a hunch, right? That's not an effective strategy. So here is really my strategy, and it comes down to the couple weeks before earnings or even the day of earnings. Say a company like Apple reports earnings in after hours, and specifically Apple does report earnings here, not this week but next week. So I think this could be really good this upcoming week to do this on something like Apple, or even Tesla doing this on Monday, or Netflix doing this on Monday as well. Netflix reports Tuesday. Wednesday you do have Tesla. Thursday is going to be Snapchat as well. That's another really big mover. Snapchat moved 60% last earnings. Kind of incredible. The stock actually dropped 25% the day of earnings, reported earnings, and after hours the stock ripped up 60%, right? That was a pretty easy trade to see, but this strategy was involved with all of them. So basically what you want to do is figure out a directional move. It does not matter which direction the stock is moving. For an example, Facebook, the couple days before earnings, for them, the stock was actually dropping. So I like to do this as kind of a day trade, right? So if you get a directional move, usually they're going to be decent, and usually before earnings the implied volatility gets higher, so the premiums on these contracts really start to run. Like coming on Monday, the implied volatility is going to be lower. The contracts are not going to be as expensive, but the closer you get to that earnings day next week, or 2 weeks from now, Thursday, you're going to see those premiums really start to juice and get more expensive. So really what the strategy is, find the directional move, whether there is news, whether it is just market sentiment to the downside, to the upside, it does not matter, whatever direction it is. Unfortunately, this strategy is only good for directional, right? But even if you have, like Apple, Friday, a 3% down day, this strategy would have worked very well to the downside. Maybe Monday, you get an upside directional move, and maybe you could get some calls as well. But typically what I like to do is, obviously, their earnings is going to be, what day is that? That's on the 28th is Apple earnings. So this is perfect. I wouldn't want to go to the 29th expiration, because the 28th earnings, the 29th, you're going to see that move. That is going to be a Friday. So I would like to go to the May 6th and go out. I'm directionally bearish. So just imagine the stock is red on Monday and in a substantial way. Now, what I really like to do is say buy 5 of these 150 puts. Buy 5 of those. And this is not financial advice. This is just a better alternative strategy to some of the other strategies I see out there for earnings. And this is really what I like to do. So if you get that negative move and you can confirm that negative sentiment, that bearish move, this is probably what I would do. Buy 5 of the 150 Apple puts, right? $635. Now, you don't want to hold these. What you want to do, say that the contracts go up like they did on Friday, 67%. Now, if that happens on Monday, you'd be able to sell half of these, sell 2 or 3 contracts, get your initial investment back, and then hold 2 for free heading into earnings. That's why it's basically risk-free, because you got your initial investment back. The only thing you can lose is profits, but I don't want to hold these multiple days. I want to do this in one day. You don't want to get so little time that you could lose half of your money in a day, but you don't want to get so much time that you're not able to make these free, right? Like these ones went up 67% in a day. Now, let's just do July. These went up 30%, so you can still do them longer dated. It's going to cost you more money, and they're not going to go up as much, so it's going to be harder to make these free. But you still have enough time where if Apple did reverse throughout the day, maybe you would have lost some money, but you wouldn't have lost all too much, right? So hopefully this strategy kind of makes some sense with you guys, and you can do it for Tesla, Netflix, all of it. It's basically starting with a larger position, like $600, $1,000, whatever a dollar amount you're using, and making contracts free. That's essentially what it is. And for Tesla, they report on Tuesday or Thursday? Is it Tuesday or Thursday? Tuesday or Wednesday. I was wrong. Both of those were wrong. They report earnings on Wednesday. So what I would do for Tesla is go to the April 29th. You want to at least get one expiration further, right? Because you want to be able to collect as much of that premium as possible, because odds are these contracts are way out the money, so they're not going to go in the money unless you get a black swan event, unless you get a really good or really bad earnings, and that's where you make a lot of money. That's where Facebook, 275 puts I had heading into earnings and 250 puts, that's where those can really print when Facebook drops 25% and hits 240. Those contracts were worth thousands of dollars a piece. They were very cheap because the markets did not expect that to happen. And that's really the beautiful thing. Even if Tesla went up to 1100, you have an extra week of time. These contracts will still do very, very well, but essentially the same exact thing. Go out to maybe the 1250. Buy 5 or 10 of these. It's going to cost you $935. Obviously, lots of money, right? But you got to confirm the directional direction it's taking in a day. You don't want to take the opposite direction 9 times out of 10. If the stock's going down, the markets are really bad, you got a news catalyst or whatever, you don't want to buy calls on that day. The calls are not going to go up. They're going to go down like 54% like this. So kind of a risky strategy, kind of not if you know what you're doing. I would play around with this and actually paper trade this if you guys wanted to implement this for, the coming days, because the real earnings season, the big dogs, it's really going to be next week. You do have, Netflix and Tesla for this upcoming week, and Snapchat, but that's really all as far as the potential big movers. The week after that, Coca-Cola, Activision, Microsoft, Google, GM, PayPal, Facebook, Ford, Amazon, Apple, Twitter, Robinhood, Roku, a lot of the bigger names are actually the next week out. So you guys can kind of practice this strategy if this is something that you like and you would want to implement this. And that's how I was able to take, a very small amount of money, like $500 into 20 grand or so, just off of this strategy. And the worst case scenario is you lose your profits, but you won't actually lose your portfolio value because you're not playing the guessing game and you're not just YOLOing your money in one direction or the other. So that's really the way that I like to trade it. Play the momentum on, the daily moves, whether it's negative or positive, get contracts free. And then even sometimes the next day is going to be positive. So you could get puts for free one day and then get calls for free the next day. Boom, you're playing both directions on earnings. So I think it's very important. If you guys like this strategy, hit the like button, subscribe to the channel, subscribe for more strategies. If you guys like these kind of videos, I will definitely make more because we got tons of golden nuggets to go over. If you guys like to talk about this stuff more, come join us on the live streams, 10 p.m. to 11 p.m. Eastern Standard Time. We do those Sunday night through Thursday night. Every single day there is futures open the next day. We are live every night. Come join us. If you guys want to come join the trading group as well, link down below in the pinned comment and the link for my Twitter account. Go ahead, follow me over there as well. Thank you guys for watching, and I will see you in the next one.